What's going on, everybody? This is the Blockchain Backer, bringing you the latest cryptocurrency news and analysis. Today, we're going to be taking a peek over here at the Bitcoin price chart, which has been holding up really well while we've been seeing a whole lot of chaotic price action over here in the stock market. Fortunately, we have a bunch of green over here in the cryptocurrency market today, and really, even for the week, we actually have a green weekly candle here for Bitcoin, Ethereum, and the altcoin market. While places like the S&P 500 are under big stress, along with the Dow Jones Industrial Average and the NASDAQ. All the while, the DXY, or the US dollar currency index, is pressing through that 106 level, which isn't by any means any technical level. There's no moving averages that really represent this particular level. Even if we take everything off the screen and lay down a Fibonacci retracement in here, there's no particular level that exists here at 106. It's just that we know when we got through 106 in the 2000s, that did pop the United States stock market, at least the NASDAQ. And then by the time we had broken back down through 106 again, we actually found our bottom. Then surging through 106 was our capitulation moment back then in 2022. And then breaking back through 106 marked our low for us to shoot our way back up again. So there's no real technical reason why 106 has significant meaning outside of seeing how it has reacted historically. Here we are, we're pressing through 106, and we're seeing some pretty big red action out there in the United States stock market after the big retracement that we've seen so far. So while those are causes for concern for stockholders, 401k holders, and the like, fortunately, crypto has held up really well during this entire week. Now, if you've caught my videos for the last couple of weeks, we spent a lot of time talking about Bitcoin's recovery. In that, really, it's pretty clear. If Bitcoin's going to follow its magical cycles, if it's going to follow its magical block reward halving, the current lows for Bitcoin would need to hold. If we were to break below them, it sets up a good chance that Bitcoin is not behaving in these four-year cycle block reward halving cyclical behaviors. As we know, Bitcoin worked out a range for 9 months. It's now been working out a new range for 6 months. That's precisely how we behaved back in 2015 and 2016, and in 2011 and 2012, when we were a little bit over 200 days away from the block reward halving. But the thing that consistently happened was working through a range, creating a new range, and then working into a new range as we were leading up to the halving, after we had already capitulated. And up until this point, that has been true. So long as this low holds in here, there's really nothing to discuss or worry about when it comes to Bitcoin. If that low were to break, then we would have a series of unfortunate events. You'd have the first time where we actually break back down and lose a previously established range. And then at the same time, have some unfavorable macro price action happening at the exact same time. So with the wild action over there in the stock market and the relatively tame price action over here in the cryptocurrency market, I figured we'd spend a lot of this video taking a broader look at the macro picture of markets right now, because I think we've kind of established over the last couple of weeks what Bitcoin's recoveries look like, what they look like heading into four-year cycles. If Bitcoin is going to act in some type of majestic way that is based on the psychological behavior of participants on every 4 years, or as a block reward halving approaches, the participants all behave the exact same way with excitement, FOMO, and push the price. If it's just baked into the cake of how participants are going to react, well then, hey, we're just, that's what it is. And the rule is set there. Bitcoin should not be breaking into lower ranges. If it breaks into lower ranges, that will be different behavior from all pre-halving time periods. And again, 2020, we won't go into this, totally different example. Our current Bitcoin price is as if we've only gotten right here. 2020, we got all the way back up into retracements. This is not the same. And this was a range backtest of a range that had never been previously tested as support, which we've gone into deep discussion about several times, and that in circumstances where we had not left gaps, or we had already performed these backtests of previous ranges, we just continued marching up. So that really is the picture here for Bitcoin as it's on top of its previous range, just like it has each time prior as we approach the halving and as we are now. But the big thing out there is what is going on with the stock market. And this has all of my attention right now as crypto is relatively tame. Like we saw Ethereum's up for the week. You saw Bitcoin's up for the week. The altcoin market cap is up for the week. This is where a lot of my attention is focused on. The first thing I want to do is set the tone for where the stock market is. And this is things that we've actually talked about on the channel for years, and how high the Dow Jones Industrial Average is, that it has gotten really close to being at a 4.236 extension, and definitely a bubble structure. We have seen the same thing over here on the NASDAQ with how high it's gotten. It's gotten almost to the 4.236 extension. Definitely parabolic structure. And then the S&P 500, no different, also hits the 4.236 extension with parabolic structure. The big question has been whether or not things like the Dow Jones and the NASDAQ will get their opportunity to hit the 4.236 extension, as getting up here, rolling over right above this 3.618, and then heading up to get this final little touch. We've seen that happen several times, and each time we actually end up having a recession. Really, the two most recent ones that we have, the Great Financial Crisis and C19, they were paired with price action similar to that, where it rolls over and then inevitably goes to break out into a new little high. And then after that high gets broken, boom, things start falling apart. That's the same thing that happened over here with C19. This is the run up of 2017, ranges for years, finally gets above the range, and then it all falls apart into a brief recession. On whether that's going to be the same type of thing we see happening here for the Dow Jones to go on and hit, which is why we've been looking at examples similar to that to see if we can see similar price action occurring in here. In that each time these continue up, they're marked with a series of higher lows and a parabola until those higher lows are no longer in place, which was also true here, leading into the rally before the Great Financial Crisis came in. But as you guys know, we've used the example of the Great Depression multiple times when looking over here, and how amazing it is to see that the current run-up we've had since the Great Financial Crisis has almost been the same size as what happened in the Roaring '20s that inevitably led to the Great Depression. This, of course, was met with some ranging, followed by the parabolic push, only for it then to fall apart afterwards. But why would we even be using these examples in the first place? Why are we looking for similar price action to a recession or even a depression to end up showing up for the stock market? Well, if you're not already subscribed or you haven't watched his videos yet, of course, I recommend you watch Alpha Beta Soup over here on YouTube, who is also known as TXMC over here on Twitter at TXMC Trades, in which he provides all the economic data showing the similarities of what has happened leading up to a recession occurring, and that we have all the markers occurring in the economy happening in order that eventually lead to a recession. Now, a lot of times these indicators or these behaviors show up early, then finally, like the final domino or the final shoe to fall ends up being employment. And then that's when things start hitting the fan. So with economic data pointing to recession on the horizon, along with price action nearing the 4.236 extension, we've been monitoring what have these rules been in order for it to go set a new high, as we've seen really the whole way up, and then what happens when they start falling apart. And we don't know if those rules will remain true to now, but we can at least apply them from what's happened recently to say, are we doing something similar now? Because I'm sure many people have seen the Wall Street cheat sheet to show the psychology of a market cycle and what it looks like when a bubble actually pops. And while we know that the Dow and the NASDAQ are both short of their 4.236 extensions, and we know that prior to a recession occurring, the last two times we did see prices creep into a new high and then fall apart, we also know that retraces can be a problem as well. That in the Wall Street cheat sheet, that's exactly what we see in this complacency phase, is that you have a crash followed by a retrace and then a rollover, and the real bubble pop begins, which we saw earlier here on the NASDAQ in the dot-com bubble pop, that it went back into retracement levels and then rolled its way on over. So as we sit here for the Dow Jones Industrial Average approaching this 4.236 extension, as you likely know, my concern has constantly been retrace levels and whether or not we're going to get one little push up. Either way, my thoughts have been the next move is not a recession, that it actually would be the big one. You know, I always criticize the accounts out there that are constant doomers. They essentially call for Great Depression the whole way up. I'm sure you know who those accounts are. Some of them are very famous. Every time there's a move down in the stock market, they scream, now's the time it's happening, only for the market to rally up higher. But even during C19, I was creating YouTube videos here during that time period. And as you guys know, the double top bull flag breakout, back test into the bull flag, V bottom. That was the expectation at that time. And to march into new all-time highs, which it did, which led to the 2021 bull run for crypto and for the stock market. But, some of the reasons outside of just using the Great Depression fractal or outside of just using 4.236 extension measurements to say, this has the potential for creating the long-term top over here in the United States stock market. We've even looked at this structurally, that I'll take these off to show, we've been in a range and then we've gone on to complete 5 waves, and our C19 crash was actually just wave 4 back to wave 1 to go on for wave 5. And I've shown this example in like Ethereum to show how you can have that double tap bull flag breakout back test into the bull flag V bottom after you double tap on top of a long-term range to go build your top. And I've even shown this in relation to like Ethereum. So I'll take all these off and we'll get Ethereum over here as well to show, how we have our range, and how we have our range. Then we'll double test the top of this range area before eventually scooting our way up and really rushing up. Notice I will have the parabola come in here, followed by one more short squeeze to then violently backtest right into that spot. Then notice with Ethereum, the parabola, the short squeeze, then the violent backtest right into that spot to then go on for one more push. All the while, in both examples, these are 1, 2, 3, 4, 5s, right? 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. As you can see in here, Ethereum pulls off a retracement, retrace. So far, what do we have for the Dow? We have retrace, albeit a big one, but it is now cleared back through all retracements. We'll get to that in a minute. But what we definitely see is very similar price action for ranging. And what was Ethereum? It was a 4.236 extension, right? Which is very close to where we've gotten over here for the Dow Jones, albeit a little bit short. Of course, Ethereum then ended up crashing and crumbling, and something like that would get you way down here, not only way down there, but even take you into new lows below the great financial crisis, which we've talked about this for years. But why would we even consider this too, right? So not only do we have like the same price structures and behaviors that are happening in here, of double tapping on top of the all-time high, the violent breakout, the violent back test, the extension, all the same exact behaviors with 5 waves. It's if we even like zoom out on this and look at what the full cyclical behavior has been like. So like on Ethereum, we'll put you on this and get ourselves really zoomed out. And we'll do the same thing for the Dow. We'll zoom way out. And what we see is all the same things. Remember, here we are ending with 1, 2, 3, 4, 5, including the violent backtest into the bull flag to go for one more. Same thing goes for Ethereum, right? 1, 2, 3, 4, 5, including the violent backtest for 4 to then go on to the high. But look what happens all along the way on both of these. Essentially 5 large waves with big, like multi-decade stops that happen in here. And we had big 5 waves happening in here for Ethereum. Big pauses, final consolidations, all the same little bumps to go along the way, and then concluded with nearly full extensions in here and 5 wave structures on both of them. And they are the exact same structures here on these final 5 waves. So when I talk about Great Depression and kind of laugh at the idea of recession, I do it from the aspect of just charting and saying, this thing has run up for almost 100 years. It's done the types of structures and extensions of what happens before. It's not just a quick recession like people talk about, where the Fed's going to come in and throw money at the markets and then everything's going to just surge up and rampage and be just fine. But that there could be longer term problems for the stock market moving forward. But the big graded debate comes from, is this just a retracement happening here for the Dow, as we saw in here for Ethereum, where it's just a retracement, and as we see on the Wall Street cheat sheet? Or is there still that little push that happens in there that acts like our previous recessions? One more extension, and like the Roaring 20s, one last push to go hit full extension, right? Starts from the bottom. Literally, it's a perfect match for a 4.236 extension. one more push to go get it. And that's the big question right now and the big thing we're all trying to solve. Some people don't agree with my ideas that I've shown throughout the years, that I think we are at the peak and that this is not something to like laugh at. I've had people comment on Twitter and YouTube, haha, Great Depression, good luck with that. But this is why it's not fear mongering. It's totally just showing the technical structures of where we are, how high we've gone, and that we've done things very similar to bubbles. And why I've been on Great Depression alert for the Dow Jones ever since we've gotten to that 702 retracement. All the while not panicking when the world was screaming the end of the world back in August and September of last year, but saying, look, even if it is the end of the world, retracements would be likely to happen, which of course we haven't seen in Bitcoin. So a lot of people probably don't listen to that because of recency, but it is so normal to have retracements occur in here. And now we've had them, right? So now we've had the retracement levels, and the big debate is whether or not do we get that final push? Do we get that little move up to hit the 4.236 extension, or does it start falling apart from right here? And that's still the unknown answer. It's still the question that does remain. It's not uncommon to get through all retracement levels and then pull back in them. But what does tend to happen is that we do make higher lows, working our way up until the parabola gets in place. And even this pullback right here, as we can see, pulls right back into this bull flag, which is placed up here at the peak of this range, right? Higher low. Suddenly, there's your first lower low emerging as this break happens in here. And then that sends everything on its way. Looking over here at C19, I mean, we could look at both of these ranges on this broadening wedge. The same thing is true in here, or the bigger example of it up in here. You know, these lows just tend to keep grinding their way up until finally the parabola is in place. We lose it, and then lights were out. So right now, currently, yesterday with the stock market, what did we get? We got back into the like bull flag. Is what we were talking about there in the great financial crisis, that it did pull back into this bull flag in here. Take some of that off. This bull flag was reached in here. We can zoom in really close to look and see that it comes really almost all the way down to the bottom. Comes within 21 points of the actual bottom in here to then march its way up and have the parabola. Only 21 points. And as we can see right here, right now, there's that little bull flag in retracements. But what did happen yesterday is just this slight tick below it. It actually went like 40 points below, just barely ticking right below that level here on the DJI. Whereas over here on the E-mini Dow futures, which is traded many more hours during a day than the Dow Jones is, we actually see it got right to it and just sits a mere 12 points above it, right? We saw 21 points last year, 12 points. Does that make the difference that the DJI wicked 40 points below? Does it make a difference that YM1 holds 12 points above? That's a tough one, right? And even if it does set the new low, does it automatically mean things go falling apart? Because looking back at those, when we have these new lows getting set, it's after we've set the new all-time high. We set the new high, the confirmation was a new low. The new low meant lights out. That's what occurred in each of these scenarios. So that it's still up for debate. The thing is, the confluence is where, of course, we're seeing the United States dollar currency index surge at 106.47 right now. That's historically been the big breaking point for the stock market, at least in 2 to 3 different circumstances. And so whether or not we end up getting that little push, the reality is you can see how high the stock market actually is. And essentially we're watching the market potentially try to chase really the last 16% of this move after it's already risen well over 400% right now. The market's going for that last 15%. Of course, we remember what happened with that with Bitcoin and Ethereum, as all the market participants were going for 100K and all that stuff. Difference is, of course, the market is pretty uneasy, unsettled, the most searched recession in history. That's typical. If you remember Michael Berry, of course, he goes down in history as the person who shorted the housing market and kind of a legend for doing that, right? But the reality was just like this. All that economic data was coming up early, and he shorted it way too early, and he shorted it really at that time period. He shorted it in 2006, like around something like this. And so Michael Berry's entries, if you've ever watched The Big Short, All of that is taking place here in 2006 in this move, which is right here, right in here, right? And this is where Michael Burry's shorting the market and going crazy. And then for the next 2 years, the market rips up and then rolls over finally. I think the thing that concerns me the most about this is really just the 401k holders, people who've put their money away into this their entire lives and probably don't see this. I'm not your financial advisor. I'm not going to tell you what to do. Make your own decisions. All I can do is present data, and you can decide whether this data is just completely dumb or if it's a valid argument or not, and time will tell. But I talk to my family about this because they're the people I know. I know their situations, and definitely they won't listen to anything that I have to say. And they're totally complacent. And I say, well, at least talk to your financial advisor. Talk to your financial advisor. And they tell them, don't touch it. Just keep contributing like you always do. As for me, right, I've got like 2 to 3% of my net worth exposed to the equity markets. Otherwise, I'm either in the safest thing in the entire world or in the riskiest thing in the entire world, right? I'm in crypto and I'm in cash and treasuries, and I guess gold and silver, right? I don't know if that's the safest stuff and how that would perform in a moment of something like this occurring. Likely in a liquidity crisis, probably not well during that moment, but there's definitely complacency and people unwilling to think about it from this aspect, and even chasing this last little bit. It's definitely unsettling, but right now, we're kind of on edge. We're kind of waiting to see, do we see this thing really start to shuffle down even more? And if it shuffles down even more, then we definitely just don't have really precise examples to reference back to get us that little push. And then it starts opening the door up that this whole thing was just a retracement, and an extended one at that. And that this thing could get going because we have the confluence of one element at least. That's the DXY. Fortunately, as the market opens today, it's going to open green, but it's one of these things that I talk about, and I've taken a lot of criticism over the last couple of years, is that for Bitcoin, really the only thing I've looked for is a retracement and not new all-time highs. Yes, Bitcoin is still behaving precisely as it has during all of its past recoveries. But Bitcoin was created right here. And that's why I've shown so much data to show when the new bull runs happen, when the new all-time highs happen, they've been in conjunction with the Dow Jones breaking out into new all-time highs. And so I've had this viewpoint the whole time. We're way up here. I've shown the correlations between Ethereum cycles on the Dow Jones, all this stuff that you're seeing right here. This is not the first time the YouTube channel has seen this. And this is the argument for the challenges for Bitcoin setting the new all-time high. And this is going to be the big test, right? If this is a big parabolic bubble printed by the Dow Jones, and if this thing is going to go falling apart, this is where Bitcoin is going to have to prove it. Is it operating on its own independent cycles, or is it operating in conjunction with the stock market? So long as the current lows hold at 24.7, it's still acting like past super cycle recoveries. But should it lose 24.7, especially if it loses $24,000 and gets down to like 20, which a lot of people are calling for, it wouldn't look too hot, especially if this guy is falling apart. So everything is on edge right now with the Dow, and I don't have the answers on, is this the end of a retracement? It could be, but I definitely have very, very little exposure to the equity market and keep a lot of money in safe stuff. And most of my investing that I do is crypto and gold and silver. And for both of those, we're going to be kind of finding out at the same time. But I hope, I hope this info helps you in some way. If you haven't seen this before, it's been it's been like my thesis the whole time, right? For all those who say, why would you say Bitcoin can't set a new all-time high? Why would you say it's going to be a challenge for Bitcoin to set a new all-time high? Well, it's going to have to either be that Bitcoin is following the magic of block reward halvings in order for it to be able to do it. Because if there is a correlation to the stock market, this is the challenge why. This is why my view is it's going to be difficult for Bitcoin to go surging into some raging bull market because of this circumstance that is presented here in front of us and with the stock market. And of course, it's not just the Dow Jones that is here. It's that NASDAQ that's almost there as well. And then the S&P 500, which has already gotten there. And again, right now, today, the current price action in the market, we've had a good week here in crypto. We haven't seen anything start to fall apart in here. And we really have some established rules for how Bitcoin has behaved before. So this video isn't necessarily pertaining to hey, if this particular thing happens in the stock market, then this is going to happen to the cryptocurrency market. We've known dang well that, you have to hold these levels in here for Bitcoin. And it's doing a good job doing it. I actually talked about this in Markets in the Morning yesterday, looking for a move up to happen quickly, as we've seen happen back in here. Now the question is, is there another 5 waves to go startle the market again one more time, or has this thing already started to take off? The behavior is acting fine for Bitcoin currently right now, even with the wild action happening over there in the stock market. The real thing that happens that provides inconsistency for Bitcoin's behavior is the set of the new low, which is what we have people screaming for over there on Twitter, that all those things are okay, but we've gone through it. It's not okay, not based on history. It's not okay to go be taking out $24,000. And that isn't happening right now. Bitcoin is holding up fine. The crypto market is a sea of green over here, and it's been green for the week, even in this chaos of the stock market. But with where we are right now and the action we're seeing, a potential lower low set there on the Dow, even though we didn't get it on YM1, just wanted to kind of reiterate really the bigger picture of the Dow, the 5 wave structures, the 90-year cycle, the reasons why there's the concern up in here, the challenges on seeing, are we going to have the pre-recession or pre-depression kind of pump that happens where there's just this one little parabolic ending that happens in here and then lights out happen, or if we're in a retrace and are we getting signals that there's problems here in this retrace? And that's the real big challenge that we're at. And when I make tweets like this saying on Great Depression watch, or me saying, I don't think it's just going to be a recession, I think it's going to be something big, I come at it from the chart perspective. I come at it from how have we acted in the past? We're almost as high as we were during the roaring 20s. We've got the 5 wave structure, the double tap bull flag breakout backtest V bottom for wave 4. And here we are up near the 4.236 extension. In each recessionary example that we have from the last decade and a half and from the Great Depression, in all those examples, there was this last little parabola that did end up happening. The problem is we know retraces are real. We know retraces can reject, and we're in a very sticky spot right here, right now, on whether or not that is the case. And so as things play out, as more time passes by, we'll try to solve that puzzle. But to understand why retraces matter, why you look for complacency and the market just does a bounce and everybody thinks it's all gravy, or if we get that pre-recession pump or pre-depression pump, nothing changes for me in regards to my thesis on this market that we're on the cutting edge of something big coming for the market eventually. And I don't know if that's right now. I don't know if that's 6 months or a year or 2. But with the really zoomed out picture, you get to see the things that I'm talking about and why I'm raising these concerns that we're having, why I'm on Great Depression alert, and the things we're looking for when it comes to complacency retraces or pre-recession and pre-depression parabolic endings that eventually completely lose all of their steam. I don't think we have the full answer yet on retrace or pre-recession pump, but we definitely have concerns right now when it comes to the DXY breaking out, and now that Dow has set that slightly lower low. And so we'll see how the rest of this week goes to see if it gives us any more data. But as for me, when it comes to like equity investing, I definitely don't have very much in the stock market to either one, care about chasing for that little last bit, or to take the risk here in this area. It's not something of interest in me. Any cash that I otherwise would have had sitting there in the stock market is sitting in treasuries and high yield savings accounts. I'm not really participating in finding this answer. I'm way more interested in finding this one, the one in the cryptocurrency market and in Bitcoin and XRP and Ethereum and the altcoin market. And we have some pretty clear rules on how it has behaved historically. And if things start to change when it comes to that, I think we have a pretty clear picture because we really do know when super cycles have completed on Bitcoin, it has very repetitive recovery behavior. And if that gets lost, we do get to finally say, this time is different for Bitcoin. And while most people think it wouldn't be different to go lower, it actually would be different. It's a lot of recency bias pointing to 2020. But what they're not recognizing is the gap that was created in the April breakout in 2019. And that in the end, we had all the backtests we needed in previous recoveries. We still do have those. If we lose this support, things are different for Bitcoin. And then we really get to start pointing over here at this picture for the stock market even more. But as of right now, it's acting totally normal. And for that, I'll take it over here for the crypto market. And we'll watch it every day until something changes. But I hope you enjoyed this video. Got a little refresher on the height of the Dow, the structure of the Dow with the 5 waves, and really that really big picture of the Dow in regards to how high it actually is. And the examples of when we have something of this magnitude, when we have these same 5 waves to come for the ending, how they end up finishing themselves off. So not here to scare the, not here to scare the daylights out of you, because this is nothing new. This is things that we talk about. The big unanswered question is retrace versus pre-recession pump. It seems like we're still waiting for that to emerge itself over here in the stock market. As for me, I have very little exposure to the stock market. I do see the signs of complacency with my own family. They won't do anything. I'm so concerned about it. I even have my own kids' college education funds. 2/3 of it is in money market funds. Well, hopefully they're right and I'm wrong. But otherwise, as for Bitcoin, as for crypto, a good week, actually, in the sea of red in the stock market. So, all right, we're going to go ahead and wrap this thing up. Hope that you guys enjoyed it. I know some videos has been spotty this week. I've had connectivity issues over here, but I got this thing recorded really early to try to get it out super early. And it looks like we succeeded. So I hope that you enjoyed this. I want to thank you guys so much for watching. If you're looking for something to do, of course, you can check out my website over here, which is bcbacker.com. This is a course I put together where I deep dive into the cryptocurrency market and the historical behavior of the market, teaching you how to set up your own charts and indicators within TradingView and CoinTrader Pro, talking about a lot of indicators, patterns, ranges, the Wyckoff method, like Wyckoff accumulation and distribution, Elliott wave theory, historical behavior, compare that stock market versus Bitcoin to understand those correlations between breakouts into all-time highs for the Dow and Bitcoin breakouts, and then a lot of additional stuff that I've learned along the way, such as emotional management, crowd behavior, tokenomics, and all that kind of stuff. This also includes downloadable spreadsheets in here. So if you wanted to print out stuff in regards to, crashing structures, ranges, Wyckoff method, Elliott wave theory, that's all available for you to download and print out or just save on your computer. And you can check that out over here on bcbacker.com. Otherwise, guys, I wish you a wonderful day. I want to thank you so much for watching. If you could, please like this video and give it a thumbs up. If you're new to the channel, please subscribe and hit the notification bell so you can be notified of when I create new content and when I go live. As always, this is not investment advice, and I am not a financial advisor. But if you ever need a pick-me-up or a little bit of reassurance, just remember that the blockchain backers got your back. Have a good one.